Good morning, Britain, and good morning to the rest of Europe. And from now on, we're going to have to get used to treating those two as separate entities. What are we facing here? Is this LTCM? Is this another Lehman Brothers?
Well, the Lehman Brothers versus LTCM divide is absolutely the right way to look at it. Is this going to be a short, sharp shock, or are we really seeing a new reset in terms of asset values?
It's barely even a month since that remarkable night when the UK voted to leave the EU. And as I said at the time with this chart, that was also the night of by far the biggest percentage fall for sterling ever since the end of the Bretton Woods regime back in 1971. The critical question we were asking then was this going to be a short, sharp shock, more like LTCM, or was this going to be the beginning of a deeper, pervasive crisis? Well, now we know. If we take a look at this chart of the VIX volatility index, you can see that so far, at any rate, it appears to have been just a very short, sharp shock. Volatility is now actually quite a lot lower than it was ahead of the referendum result. Similarly, if you take a look at what's happened to sterling, basically it moved down for a while. It recovered a bit when Theresa May sewed up the prime ministership quicker than people expected. But broadly speaking, it's exactly where it was on that Friday morning. There has been one big one-off adjustment, and that has been enough for now. Now, if you take a look at the stock market, which obviously sold off a lot at the time, you can see that both the FTSE 100, big multinational stocks, and the FTSE 250, which is much more dependent on the UK economy, have recovered a lot of ground after that first sell-off. But if you see what's happened to the rest of the world, you can see that a lot of that is down to the effects of the currency devaluation. The UK is still perceived as having lost a lot of value compared to the rest of the world. Also, if you take a look at traditional safe havens, either the gold price when you measure it in sterling or gilt yields, obvious places where people who tend to buy when they are uncertain, have risen sharply after the referendum and have not moved back down again. It's obvious that uncertainty persists. Now, why that uncertainty? First of all, we've now discovered that there is no systemic crisis, that the British have, as they've done many times in the past, decided that the currency can be allowed to fall and that can take the strain for the rest of the economy. But the big question now, which we didn't perhaps grasp before the referendum, is that there is still a lot of different possibilities out there. What exactly will Brexit look like? Could it be a very market-friendly option in which we really leave the EU only in name and maintain virtually total access to the single market? Or could it be a market disaster, a market isolationist nightmare in which we lose our access to the single market in return for being allowed to clamp down on migration? We need to know that before British assets take another decisive move. So now we do know this.
Brexit means Brexit.
The critical question now is, what does Brexit mean?